Hi, this is Sean from Settled. Happy New Year. Uh, Starting January 1st, 2019, in addition to or coming into the new year, as always, there are going to be some changes to the tax laws. And one of the things that we do at Settled with our software is we ensure that when users log on for the first time in the new year, they have access to all the new tax tables, the tax rates. If it's a current application, we're going to work to get it into the software. And in 2019, we have some more things than just the normal modifications to the tax brackets. And I wanted to use this video to go over those. So I'm going to tell you about the new features, but first let me say the software is going to work exactly as it did in the past. We've not changed and modified the interfaces or anything of the like. We've simply incorporated into the software the new taxations that are going to be applicable, the new tax rates, and have allowed the software to work in a fashion to where our users can take advantage of those. So, first of all, as always, new tax brackets, new deductions, those are all into the software. It'll seamlessly work into the calculations that you've been used to using. Now, big change for 2019. Alimony is no longer going to be a taxable event. It's going to be treated in determining net income, net available income, just as you would and we have traditionally done for child support, meaning there are no taxes paid, there is no deduction for the payment of that. Software reflects that. All you have to do is go to the net available income calculator, enter in the incomes, any of the filing statuses, child support, alimony, anything that you have in the past. Calculate, you're going to get the same net available income, but it will not do a taxable, there'll be no taxable event as a result of the payment of alimony. But under the new tax law, we do realize that it is not retroactive, meaning that any alimony obligations ordered or set prior to January 1, 2019, if those are modified, alimony could be a taxable event. So you'll notice when you're on the screen, it will note which calculator you're on. Net available income calculator, alimony, non-taxable deductible. That means that if you do a calculation on this page, alimony is not going to be a taxable event. But if you have a case that is a modification case and you need to see what the tax consequences of alimony are, simply switch using this blue button. And it is going to take you to a calculator that under the new tax laws, alimony will be taxable and deductible, which means you can determine on old cases or even for a comparative analysis, looking at what alimony is in the new case, you're going to be able to use this calculator. So you can switch back and forth between them with the blue button here. Now, those changes have also been worked into our child support calculators, meaning that on our combined worksheet A net available income and our worksheet C net available income, that you have the same thing. It'll default and load to a non-taxable event, do your calculations, and it will return it without any cost benefit of alimony. But if you switch over to to alimony being a taxable event using this blue button, when it returns under the new tax laws, it will give you the cost benefit of the alimony. Everything else operates the same. The interface is as it's always been. Now, one other change that we've made, and it's on both the child support and it is on the net available income calculator, the standalone, and that is the pass-through taxation rates. Under the new tax law, certain entities, pass-through entities, if they qualify, sole proprietorships, LLCs, any qualifying entity, if it qualifies for 80%, you can select the taxed at the 80% rate, and the software will perform that calculation for net available income based on that consideration so you have the proper calculations for your client. You could do it at 100%, you can do it at 80%, or if there's someone who is W-2 and has a qualifying entity, you can blend the two incomes together. The software will not determine if an entity is a qualifying entity. That's going to be something you or your client have to do, but once you've made that determination, the software will accommodate doing those calculations, and then at the end it'll simply return using that accordingly. So software is going to look the same, software is going to function the same, but then behind it, the new tax laws, the tax rates, the withholdings, the taxability and the taxation related to alimony, that will be considered as well, the option of being able to do the pass-through entity calculations as well. If you have any questions, email us at support@settled.com. As always, thank you for being a Settled user, and again, Happy New Year.